Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us to talk all things markets this week is University of Missouri's livestock economist, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
It's been a pretty interesting week market-wise. Let's get things started and recap what happened this week with the numbers.
Yeah, so we look at cattle markets to begin with. Cash-fed cattle were down $1.60 this week, while feeder cattle actually steadied to $2 higher this week, so up again this week in terms of feeder cattle. The October live cattle futures contract closed up 55 cents, while the September feeder cattle futures contract was up 90 cents for the week. When you look at the choice box beef price, so we got strength this week, up $3.77, really led by strength in ribs, loins, and briskets, so stronger news on the cattle side of the equation. If we switch gears and look at what's happening on the pork side, in terms of cash, barrel, and gilt prices, it was a very tough week, down about $5.50 on the week in terms of barrel and gilt prices. Yet, if you look at that October lean hog futures contract, we were actually up about $6 for the week. The pork cutout value, another week of down $2.81, puts us down nearly 24 cents in terms of where we were a year ago at this time in that pork cutout value. Bellies, again, tough for us this week. We've got some belly prices that have gotten awful near 80 cents as we've gone through this week. So it's been a tough week for belly prices.
Scott, when we take a look at the hog numbers, we're talking about two very different pictures as we look at the future side of things and as we look at the weakness on the cash side of things. Talk to me about why we're seeing this strength in hog futures all of a sudden, because it really came on Thursday and carried over into today's trade.
Yeah, I think a couple things at play. There's some discussion about going back to the negotiating table with the Chinese, which we know that we can talk about lower pork tariffs on U.S. products going there. It will certainly be helpful to us, but as well, we've continued to see African Swine Fever be in the news related to China. Second case that we now have this week, more than 600 miles from where the first case came from. We now know the Chinese are shutting down one processing facility for, I believe, a period of 6 weeks. I know everyone understands that African swine fever is very contagious, and if what the Chinese are working on right now in terms of containment doesn't work and we start to see a large spread in African swine fever there in China, when we got half of the world's sows selling there in China, we know there's some potential for that to be explosive in terms of pork markets. And that's why I think we saw some anticipation in futures markets of moving higher, the combination of disease events in China as well as maybe going back to the table for negotiating tariffs, I think are at play in what's happening in cash versus futures markets there.
I know we've talked a lot about biosecurity as a risk management tool in terms of economics. Is this a good reminder as we get into this Farm Bill debate about why having that vaccine bank for something like FMD is so important to being able to maintain not only our herds and herd health, but our economic and our markets as well?
Yeah, absolutely. And I think this is one where you think about an FMD outbreak here in the U.S. So maybe that's not a large probability of occurring, but if it does occur, the ability to get it under control in terms of containing the spread is a monumental challenge. And so I think that's why you see the let's make sure we have our ducks together if that were to happen, to try to get this under control as quickly as possible, because it could really wreak havoc in a number of markets for us. So I think the Chinese are certainly on top of trying to figure out whether they can contain this spread of African swine fever. And those are very good comparisons to be making as to why investment today could really be helpful down the road for us.
When we think about a disease outbreak like that, I would guess that for most people, they don't go to the economic side of things about having that impact. How potentially large is the impact when it comes to, you mentioned half of the world's sows being in China, but for demand, and does that also maybe come into play as we're having these trade negotiation talks again, hopefully within the next week or so with China?
Yes, I would say, right now that frankly the Chinese don't have to have U.S. pork, given how much domestic production occurs. But if you start to get in a situation where they're culling 10, 20, 30% of their herd, they're going to be looking for pork from wherever they can get it. And I just remind us, we've been on this negative discussion for a long time about where just pork prices have been with large run up in domestic supplies. And I go, you could just throw all that out the window. What's been a very negative situation for U.S. pork markets this year, all of a sudden could become amazingly positive as the Chinese are going to be looking for supplies. Um, so I don't want to underestimate the potential that these kind of disease outbreaks can have to move markets, and it can occur anywhere in the world at this point, and move markets here in the United States.
All right, not a lot of information or not a lot of reports for us to get into this week. We held over retail prices from a week ago because we had that big WASI discussion. As we take a look at those prices, where are they sitting compared to where they were a month ago, and even compared to last year?
Yeah, so if we look at both beef and pork here for a minute, I'll start by saying it's amazing how strong retail beef and pork prices have been here in 2018 relative to a year ago, given just the increase in supplies that we've brought to the market. So just again, a reminder of that demand has been really good for beef and pork, and retail prices certainly reflect that. If you look at the data that we got from ERS last week, the beef retail price for July of this year averaged $6.02. That makes us only down 4 cents relative to where we were a year ago over the January through July period. So really beef prices have been very close to a year ago levels over the first 7 months of the year. On the pork side, we had a pork retail price in July of this year of $3.73 a pound. That's up and ends what was a 3-month streak of lower retail pork prices. Year-to-date retail pork prices up 2 cents relative to where we were January through July of 17. So again, I just remind us when you think about the pork side, retail prices here in the United States actually up slightly relative to a year ago, yet we're talking about much lower wholesale and farm level prices.
And finally, Scott, we're going to talk this week about consumer confidence and really kind of a slip in those numbers.
Yeah, we want to be paying attention here. It's been a while since we probably talked about some negative news on the consumer side, but when you look at the index of consumer sentiment that we have out, the month-over-month change, so July to August, in that overall index was down 2.7%. That's certainly got the attention of for me, where meat demand might be going in front of us. Perhaps more important, that index is made up of a couple components. The current economic situation, part of that index, down 5.8% from July to August. That's even down 2.8% year over year. So some negative news. I think some higher prices working their way through to consumers, not in meat per se, but some of the other products have a lot to do with that consumer sentiment that we see for August. But that certainly could trickle through to lower domestic demand. And we've got a lot of beef and pork coming to the marketplace here for the remainder of 2018, and I don't want to have to go into the fourth quarter with not only large supplies, but some weakness in consumer demand, because that's going to make for a pretty tough situation.
How much are we watching the domestic demand side of things? We talk a lot about the international demand and the amount of pork and beef that we export, but ultimately we have to keep that product in front of consumers, and consumers picking that up at the meat case to help support those prices, especially with the amount of meat that's coming to market.
Yeah, so when you think about what's 3 or 4% increase in beef and pork supplies, and we're not moving that additional supply outside the United States, it is really hinging on the back of what's been strong domestic demand. We do talk about lower prices all the time, but I would just remind us demand has been strong for those things. Again, we could be in a much more difficult financial situation than we already are, had it not been for the fact that this demand side has stayed with us. The economy's grown. We've got more jobs. Generally, consumers have had more money in their pockets. All those things, I think, have really have at least created a little less pressure on where these meat prices would have been otherwise.
Scott, that's it for us this week. A big week of reports next week. What are we keeping our eyes out for in those numbers?
Yeah, so midweek we'll get cold storage, see whether we're building beef and pork supplies as we look here for this month. We'll get livestock slaughter on Thursday, and then we close the week with another cattle on feed report. So we'll see what we're doing in terms of feeder cattle supplies in the feed yards.
There will definitely be plenty for us to talk about next Friday.
Absolutely, it will.
Have a great weekend.
You do the same, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great day. I'm Megan Grebner on Brownfield.